If you're in a world where prices are going higher, you want to own the things that are going higher in price. And it's probably not bonds. It's rarely been bonds because bonds suffer from having a fixed rate of interest. So people don't want to own bonds when they see prices going higher. Property suffers because many people who own property have mortgages and they have to pay interest. And if interest rates go higher, it hurts their property. Even if they don't have debt, their neighbors have debt, and the people down the street have debt, and they suffer, and they have to sell even if you don't have to sell. Stocks usually suffer in times like this because people can get a better returns, they think, from interest rates that are going higher. So the only thing that benefits at a time like this are real assets, commodities, call them what you will. I mean, the price of silver nearly always goes up when there's inflation. The price of rice nearly always goes up when we have inflation. So the real assets, the commodities, usually a good place to ride it out and even perhaps make a lot of money. Or I own gold, I own lots of things. If I were buying one today, I would buy silver instead of gold. Gold is near its all-time high. Silver is down 60% from its all-time high. So if I were buying one today, it would be silver instead of gold, purely on the price basis. Silver's down 60% from its all-time high. Gold is near its all-time high. Stocks in nearly everywhere, in many countries in the world, made all-time highs or near all-time highs. One of the things I learned early in this business is you should buy low and sell high. And when everything is high, it's, for me anyway, not a terribly interesting time to be buying. There are places like Uzbekistan, which are perhaps cheap. It's a small market, new market. China is certainly depressed. There are some markets where there may be opportunities, but most stock markets have done very well in the last few years. So most things that you might sell short have been going higher, and so that's not been a good way to make money, and so that's why fewer and fewer people have done it. Just yesterday in Korea, they did outlaw short selling. Politicians, oh my gosh, politicians periodically get it into their head that they should outlaw short selling. The evil short sellers cause our problems. Actually, the evil short sellers are good for markets, but that's another discussion. But Korea outlawed short selling again yesterday. Needless to say, that removed some sellers from the market, so the market went up a lot. So the politicians pat themselves on the back and see how smart we are. We made the market go up. It's artificial and short term. And those people who don't know much about it, Richard Nixon didn't know you could do it. Even when he was president, he was shocked to find out you could sell something you didn't own. And most people have not known much about it. There have always been some people who are good at it and many who are bad at it, like anything else. But short selling, in my view, and I think it's pretty easy to demonstrate, is good for a market, but I don't have many shorts right now, and virtually none right now. So I'm not talking my book. I don't know if we're the cleanest shirt. Japan reports lower inflation. I'm not sure I trust them, but all governments have learned to lie in all governments in the world. But the Japanese certainly report lower inflation than we have. Some countries do. But whether it's lower or higher, we're all having inflation, and the price of oranges is going to continue to go higher. The price of nearly everything is going to continue to go higher, whether we're talking about Uzbekistan, Japan, or North Carolina. As you know, the central bank has printed a lot of money the last few years, so we're still having a good time in the U.S. I would suspect that good time will last for a while. There's not an election for another year, and politicians try their best to make everybody happy going into an election, so they're going to do their best. They will not last through the election, but for a while now, we're all going to feel good because Washington is doing its best to make us think we feel good. Throughout American history, we have an election every 4 years. Politicians know that, and they do their best to hype things up. If you look at American stock markets, you will see that nearly every year, in the third year of a presidential term, the year before the next election, in other words, Stock markets have nearly always been good in the U.S. because all the politicians are trying to make everybody happy going into the election year. By the time the election comes, things have usually calmed down. People realize what's going on, but for a while, in the year before, politicians can get away with it. They spend a lot of money. They do favors for people. They do everything they can to get the stock market up, and it's worked again this year. Well, we haven't had a economic setback in the U.S. since 2009, which is 14 years now. That's the longest in American history without an economic problem. So we're getting closer. It doesn't have to happen, but it always has. And this is the longest period without a recession in American history. So I would suspect we're getting closer. There are many signs taking place. Inflation's coming back. Interest rates are going higher. All the signs of things that happen before we have a problem. So I can see it coming. Not here today, but I can see it coming. It might start before the election, but I assure you the politicians all over the country will do their very best to make it cut back, hold it off until after the election. It may start. It may well have already started. You know, we've seen a couple of bank failures, things like that. Nothing serious yet. I mean, nothing big time serious. Inflation has started throughout history. When a government or anybody prints a lot of money, it has always led to inflation. It's pretty simple. The central bank in the U.S. and elsewhere, but especially in Washington, has printed huge amounts of money. It has led to inflation, and it's going to get worse. You know, we've never had such huge money printing in the history of the world, and it happened all over the world. Like, gosh, the Japanese and Tokyo, they're even not worse than Washington, but as bad as Washington, and it's happening many places. So we have a period probably never before in world history when we've had so much money printing by major economies, and we're all going to pay the price. You know, the way markets work, they go up, they correct, they go up, they correct. So we're having a correction, a normal correction in inflation numbers. Makes the central bank think, we did it, we won, we did what we were supposed to. And so people will think things are better for a while. But when the economy starts slowing down, the central bank's going to print a lot more money. Inflation is going to come back, not just in the U.S., but all over the world. Bond prices went to the highest in American history, in the world history, in fact, and interest rates went to the lowest in American history a year or two ago because they printed so much money. The money's still there. They didn't burn it up after the first year or two. The money's still out there floating around somewhere. And so inflation will come back. And when you own a bond, you have a fixed rate of income. And if there's inflation, and you have a fixed income, you know that the income you're getting is worth less and less and less. And that's why bonds start going down, because everybody says, wait a minute, I'm getting 4% from this bond, but 4% is not worth what it used to be. So then people start selling bonds and interest rates go higher. And it's happened often and it's happening again, and it will happen again.